Ladies and gentlemen, welcome back to the YouTube channel. Today I've got a very great video for you guys. First of all, I hope everybody had a good Christmas and I hope everybody had a good year in general. I hope it wasn't that bad. But anyway, Happy New Year's. We are approaching 2022 and may the charts be in our favor. So in today's video, we're going to be talking about entry work, right? I'm going to be walking you through how I technically, my thought process and how I enter the trade and everything from A to Z. So without further ado, let's get into the charts. So you can see here, I'm going to explain this on today's trade. I actually took a trade today on GJ and it worked out pretty well. I caught about 90 pips. So it was a very great trade. So I'm gonna talk you through my entry and how I find my entries and how we can perfect and also how we can find the best entry possible that we can basically get. So first things first, if we look at the 4 hour, the daily, everything is signaling very bullish. As you can see here, we are moving super bullish on GJ due to a few reasons. One of them that the yen is being very weak at this moment. So the yen is very weak, which means the GBP pounds will be very strong, because this chart is a pound chart. Because it's the first pair, we're basically trading the pound against the Japan yen. You can see here on previous days we had a massive push to the upside. We had a pullback and I was looking to take the other push to the upside. This pullback was not as big as I expected it. I honestly was expecting it to come all the way down to maybe fill some imbalance here, but the market just did not want to do that and it just carried on. Now, I was not going to miss that. I was not going to miss, just because that's why they always say, react to the market, don't predict it, right? Now, I was predicting that it comes down and, you know, gives me rejection from this side after filling this imbalance, and then I would enter for a buy, but the market did not do that. So I reacted, I adapted, and saw that the market was pushing up now, and I was like, all right, cool, let's just jump in. So we know the 4 hour, the daily, we are in a bullish market. We have higher highs and higher lows. So I scaled down to the 1 hour, and on the 1 hour, after this mini consolidation, right, I always put a box on the consolidation, and look what happens. So you want to put a box on the consolidation, and usually I make that consolidation like this. So now you can see how where my entry is. So this was very basic, a breakout pattern, right? A breakout from the consolidation box, wait for a retest, you enter. Simple as that. The more you simplify your trading, the easier it will become. I swear, you do not need to complicate trading. When you see all these fancy lines and indicators, you honestly do not need any of that. All I use is RSI. If I put it on sometimes, not even always, and my 2 moving averages, just to give me extra confidence and extra confirmations. So what happens on the 1 hour? I was watching the 1 hour consolidation over Christmas, whatever. Then we had the break. Now, as soon as we had the break, I was like, cool. Do we have a closed above or below? This candle closed with a massive wick to the upside. You can see right here. I did not enter then. I waited. I scaled down to 30 minutes time frame, and then I saw this pullback, and then I saw another rejecting my the 153,500 area. So I was like, okay, it seems like the market wants to push up, because if it didn't, it would have, you know, carried on its way. So another rejection, it went up, it made a new high. Now, as soon as it made a new high, and I was like, all right, that's it, the market's going to push down. So I was waiting for a pullback. Now I got this big bearish engulfing, but I know that this small time frame bearish engulfing is not really going to do much when you have 2 4 hour bullish crazy huge momentum candles. So that's why 4 hour and the higher time frame for directions, but we take entries on smaller time frame because the overall direction of the market is trending to the upside, and that's why we scale down to smaller time frames to find the pullback and to catch it from literally the bottom, from the start of it. So we had this pullback, and you can even actually put a Fibonacci on this. Like without even putting it on, I can already tell you that this is at a 38.2 rejection. Honestly, I don't usually use Fibonacci anymore, just because I know it by heart. So if you put it from the previous low to the previous high, we have a 38.2 rejection. It's super simple. And then once I saw that, then you scale down to even smaller time frame to really refine your entry and catch it from literally the bottom. So you go down to 5-minute time frame, and you see now on a smaller time frame, what do we have? So we have this big bearish engulfing, the 30-minute engulfing. Then we have an equal high, and then once it came back and it made a higher low, look at that. We have let me just use my ellipse tool. What do we have here? We have a low, we have a higher low, and we also have another higher low formed, and we were above the 153,500, which is a psychological level. So this was my final and fifth confirmation. The market started making higher lows, and I was like, I'm not missing this. And then I entered right there, right about in this area, somewhere around there, and then honestly was just patient, and then it played out perfectly fine. Caught over just about 90 pips, and as you can see, my target was, I was targeting the 154,500 area, just because it's another psychological level, and I feel like the market had so much momentum in it and so much force to the upside that it was a reasonable take profit for me to put in. So this trade was a 3R, a 3 risk reward ratio, absolute beautiful. I'm not gonna talk about stop loss and take profit much, right? There's other factors on why I would put my take profit there and why I would take my stop loss there. If you do want to see a video about that, about stop loss and take profits, please do let me know. But today's video is all about entries and how I find my entries. So that was it, honestly, guys. Like, this was the trade. You've seen how I look at the market, you've seen what I do, and it was a clear breakout, a clear rejection. You can even see here on the 1 hour we have this candlestick pattern, a tweezer bottom. So that's it, guys. I hope you guys enjoyed today's video. I also want to thank you guys so much for we're sitting at about 300 and something now subscribers. Honestly, we are growing so fast. Thank you guys so much. When you subscribe, if you're a new subscriber and you click the subscribe button, let me know your number, your subscriber number, down below in the comment section. I want to see how fast we can grow, how fast we can hit 500 and then 1,000 hopefully. Anyway, guys, if you find value in this video, please drop a like, subscribe, and I'll see you in the next one. Peace.